All right, guys, good afternoon. Good afternoon. Welcome to our aftermarket recap. It is 5:04 Eastern Standard Time here on the G.A.R Capital YouTube channel. Thank you so much for joining me this afternoon and every afternoon, 5 p.m. Eastern Standard Time. Happy Friday. Glad the week is over. What a roller coaster ride it was, but hey, we survived. That's kind of the most important thing. Let's go over the market today. Dow closed down 532 points, down 1.48%. The Nasdaq barely red today. Was actually had green a couple of times, down about 0.07%. S&P down another 1% today, down at 46.20. The VIX gained 1 full point, 21.57, up 4.86%. Small caps gained 1% today, nearly 0.92% at 215.14. The dollar index up 0.66%, 96.67. Bonds get bidded again. 10-year yield at 1.402%. Gold. I think gold did fall. Let's see here. Gold on the future side gained, but GLD, the gold trust, fell 0.21% at 167.80. That's GLD on your ticker. SLV, the silver index ETF, down 0.53%. High yield credit lost about 8 cents, 86.37. Investment grade bonds did get a bid, 133.01. Crude oil futures down 2.79% at 70.14 a barrel. Let's take a look here at Ethereum. We'll take a look at crypto, actually, the spot price. Let me get you that right now. Crypto spot price. Let's go ahead and take a look at it. Had to reload investing.com. Bitcoin 46,864, down about 2.6%. Ethereum 3,900, down about 3.29%. Solana down 3%. Cardano down 3%. Ripple down 8.78%. Avalanche up 8.39%. Never even heard of that. That's up 33% for the last 7 days. Wow. And then let's take a look at Dogecoin 1697, Polkadot 2487, and the Shiba 314. We'll just take away the zeros, 314. Polygon at $2.09, down 2.02%. So out of all the gainers in terms of the crypto this week, last 7 days, Solana, Terra, Avalanche, Dogecoin gained. DAI, and I don't know what that is, and Hedra, I don't even know what that is, and Helium. I don't know all these cryptos. Again, if you want to take a look at my crypto portfolio today, was down about $5,409 last day, about 3%. Still holding Bitcoin, Ethereum, the Graph, Tezos, Polygon, Luna, Stellar, Ripple, Shiba, and SushiSwap. And I did buy some this week. You could see, bought some XTZ, again, 25 bucks. Bought some Stellar, bought some Ethereum, Bitcoin, and Graph. You could see, bought a couple of days staggerly. Nothing crazy, 50 bucks, 25 bucks. Little by little, I know, just adding a little more every week, just dollar cost averaging. I know, doesn't set the world on fire. Trust me, I'm not moving the cryptocurrency market myself, that's for sure. All right, let's go ahead and go over a FinViz and see how we did in terms of the groups this today and this week. All sectors were red today. Healthcare slightly red. Healthcare slightly red. Technology slightly red, as we saw the Qs were slightly red today. Energy down 1.75%. Financials down today 1.73%. Industrials down 1.3%. Let me turn on the light in my office. Consumer defensive down 1.23% for the day. Pretty ugly, obviously. We had OPEX day today. 1 week relative performance. 5 sectors are actually green this week. Healthcare up 2.29%, utilities up about 1.9%, consumer defensives up 0.58%, real estate 0.26%, and basic materials down 0.04%. The biggest loser this week was consumer cyclicals down 4.26%, energy down 4.14%, technology down 3.76%, industrials down 2.86%, and communication services down 2.25%. Financials are right in the middle, down about 1.34%. And again, we'll go ahead and go over the 1 year relative performance. Let's go to year to date. That's probably the best bet. January 1st to now, again, the leaders in the clubhouse. Energy stocks up 33% this year. Real estate up 22.7%. Technology 22.8%. All outperforming the S&P. Communication services, financials right in line with the S&P. Industrials, basic materials, healthcare, even though it had a great week, is underperforming the S&P the past year. Utilities, another one with a great week. Still underperforming, 7.28%. Defensives and cyclicals round out the bottom in terms of the year-to-date performers in the S&P regards to sectors. Important to have a full a sense of perspective. Let's take a look at the heat map. A couple of names that stood out to me. Tesla gained 0.61%. They just didn't want to break that 900 level. Amazon 0.68 to the upside. Moderna gained another 4.5%. Charter Communications 2.92%. Live Nation 3.69%. Dish Network 2.94%. Verizon was up. AT&T was up. Broadcom up 2.30%. Skyworks Solutions up 3.63%. And Fortinet out of the software infrastructure were green today throughout the whole sector. Apple down 0.65%. Banks were clobbered down today. Yields were down. JPM was down. Bank of America was down. Wells Fargo, Citi, Morgan Stanley, all the big ones were down. Out of the consumer defensives, really only a couple of standouts was Altria up about 1.9%, and Monster Beverage was flat. And then there was one more here, Lamb Weston Holdings up 1.43%. But you can see a lot more green in terms of the communication services, really the telecoms, healthcare did gain, medical device, instruments, and a slight, some of them, the consumer cyclicals like Booking.com, cruise lines, and some airline. I think it was the airlines that gained. It was the cruise lines, travel services, resorts and casinos did well. Some of the apparel, TJX, Chipotle did a little bit of gaining here, and Hilton, some of the hotels. But again, when we're looking at industrials, again, if you're looking for like airlines, it's going to be under industrials. If I can find it here. Railroad, specialty industry, where's staffing? I thought I had the airlines here. Where is that thing? There we go. Aerospace. Wait, is it not here? Here, I'm not going crazy, am I? Apparel, cyclicals, auto parts, packaging. I know it's here. Do they consider it a utility? No, they don't. Wow, that's crazy. I don't see the airlines here, and the airlines should be here. Railroads, I don't have my, there we go. Airlines right under industrial, so as I figured. And you could see a lot of the airlines did well today. So the point I was looking for airlines was, you know, even with all this COVID stuff that's going on, I'm pretty heard of the NFL shutting down some games, and they're also rescheduling some games, mostly just rescheduling games. You would think with this COVID headline, UK is really getting hit, uptick in Florida cases, New York cases around the US. You would think airlines would have been down, travel would have been down. It really wasn't the case. So again, nice little green bounce on those as airlines did bounce today. So really what happened in the market today, let's the S&P futures here. Again, I still like the S&P as always. And you can see that 4,600 level seems to be that kind of line in the sand. Now, 4,700 was another line in the sand for me here. That would kind of get us back in range for all-time highs. So kind of think of that as your baseline if we're starting to take back all-time highs. Remember, we were just at all-time highs Thursday morning, literally at 6 a.m. on S&P futures. But now we're back to around 4,600. So 4,600 is a huge level. Why? Because we tapped it 3 times and bounced. So triple bottom possibly. It seems that we had some consolidation just as today. Again, big spike in volume ahead of all the other weeks. The only other big spike that we had was really Wednesday post-Fed, 2 p.m., 3 p.m. sort of time. But for the most part, a lot of the options volume, a lot of the stock volume came today in consecutive speaking. You can see it, the volume bars at the bottom. So that 4,600 is a key level in the S&P. If we go to the daily, we can see why the 4,600 is important. It's right there at the 50-day moving average. I think we've talked about this a lot. I think the last time we talked about it was right around November-ish when we had a little bit of a flush towards the end of the year. We tapped the 100-day and then we bounced. So again, it seems to be that 50 is that kind of that first warning of, hey, you know, this could be a bounce here or it could be continuing down to the 100. We tapped the 100 and broke it back in the end of November, back of October. And really, that was the only time we had it was October, November, where we tested the 100. But really, the 50-day moving average has been kind of that steady line of showing us where we are. So again, if we go ahead and take a look at the S&P in total, year to date, how it's been going, that's a quick percentage calculator move. You go 35.96 is where we started at the lows. I think that was, that was the low. So let's just start from last year. Let me start from the first. We started the 4th. So we're right here, 36.92, let's call it. 36.92, and we close at 46.19. This will give us where we are for the year. We're up about 16.58% in terms of the stock market for the S&P futures, not counting a reinvested dividends. So again, that's just the totality return for the year. That's from January, about 16.98%, which is pretty robust. Anytime you're riding around double digits in the S&P, that's a pretty good, damn good year in comparison to where we were in 2020, obviously. So that's where we really are now. Taking a look at the market in general, it's just been a really, really rough week in terms of volatility. I mean, I don't think I need to tell you that because you could see it yourself. Just take a look at the S&P. Again, that 4,600 being key. In a weird way, you can kind of see an inverse head and shoulders, but then we broke that and we got above. So again, you can kind of see that, but again, it's just all this is just really ugly chop for the most part. We'll take a look at VIX and kind of give us a kind of a preview of what we see. You can see that 200-day has been rejected on the 1-hour chart, which is right around 2341. So even with all this market volatility, you really didn't have any crazy spikes above 30 as an example where we had a couple of Fridays ago. That'd be a kind of a bigger panic. If you go ahead and stretch out in the daily, you can see really that line is right around 30. 30 is where the capitulation, real fear starts coming in. We're not there. Obviously on a daily, we're above the moving averages on VIX. The VIX is not tradable. Again, just keep in mind. But yet, if we look in a shorter time range in an hour, again, this doesn't scream to me fear. It doesn't scream massive volatility. It doesn't scream to me that, oh my God, the world's ending. It just doesn't. In terms of what I'm looking at the VIX, which is the fear index, we just call it. So again, kind of keep things in perspective. A lot of selling came in. We had a lot of news come in. We had a lot of stuff. We had PPI, which was inflation data, which was ugly. Powell comes in to save the day, massive short squeeze. Doesn't get continued. We had some UK news in terms of the COVID variant and COVID cases spike. And then today was OPEX. I mean, think of every single landmine you can think of. I mean, the only thing we were missing, honestly, was possibly, like a presidential speech or a GDP number or a non-farm payroll report. I mean, that was basically all we were missing for the week if we would have had a crazy ass week like this. So keep in mind, guys, in the real grand scheme of things, these weeks happen not very often, but they do, and they can be very frustrating. Absolutely. I mean, this week was an absolute shitty week for me, that's for sure, frustrating. But does that indicate a shitty month? No. Does that indicate a shitty year? No. Again, it's just a shit one to deal with, and I emphasize the word shit a lot because it really was just not pretty. With that being said, so what is that we're looking at for next week? Really, again, 4,600. I want to see how the S&P opens on Sunday. Let's see if we can get above 4673. I'm going to place an alert there. That'd be a really great step forward. If we break down below this wick here of around 4589, then that starts getting really interesting to the downside where 4520 and 4500 start getting tested. And if 4500 gets tested, guess where that's at? You're talking about right around the 100. And that's where we bounced last time. So again, if you're a bear, you're taking a look at another 100 points to the downside. If you're a bull, you're looking at possibly another 120 points to the upside. So we're right in the middle if you think about it. All-time highs 47.43, 46.19 now, 45.15. I guess if you want to say floor of what we're used to in terms of the moving averages. That's really the case, and that's really what we're waiting for. So looking at next week, keep in mind, we'll take a look quickly at Forex Factory. Shortened holiday week. Next Friday is Christmas Eve. Keep that in mind. So let's go ahead and go to next week. Forex Factory will apply. We have GDP number on Wednesday. That's the final GDP number. We also have core PCE price index, some personal income numbers. We have new home sales on Thursday, and Friday the market's closed. So really no Fed, just some economic details, and that's about it. So again, keep in mind we could start pulling back on terms of volume right around, I would say, Wednesday and Thursday. So maybe Monday, Tuesday we get a little action, but Wednesday and Thursday we'll start to peter out as Friday is Christmas Eve. All right, the boy J King is asking thoughts on Amazon for next week for a continued uptrend. All right, let's take a look at it. We know that mega caps were beaten down, so let's go ahead and update that by expanding on the daily. So on the daily here, you can see it's pretty much the same stupid range of around 35.54 to 31.38. That's around a 5%, maybe we get an exact number. 35.54 to 31.38. That's at about 11% range. Pretty big range, but that's where we are. If we take a look at the hourly candle here, our hourly chart, We really need to get above 35.54. That's really the number you need anyways. If you start getting above 34.45, maybe. But again, Amazon is an expensive one to trade, so you really have to catch it perfectly. And it's a tough one to do. So instead of that J Boy King, what is it? The Boy J King, excuse me. You go to Qs, and I think Qs would be a little cheaper if you're trying to play the bounce here. 380 will be your floor. You're at 386 right now on the Ask After Hours. I have a level above 400, maybe 393.79 if we can retake the 200-day. Again, that remains to be seen. Thoughts on Apple calls for next week? I do have those Apple calls. And right now, it seems that 200-day is just holding. And that's fine. If we can just get a boost in the market, we can cross 174. I have the 180 calls for next week. So again, a break of 176.18 would get us there. And again, good news, we're still hugging that 200-day. That seems to be that magnet line for Apple. And you can see it right there. It's just hovering around there. And yeah, see that 200-day has kind of been that pivot for the 1 hour chart. You could see it, tapped here a couple Fridays ago, tapped there a couple Thursdays ago, and it's just been holding on that 200-day. If we bring up the daily, you can see we're way above meaningful moving averages on the daily. Again, 156 being the 50-day. Really not many gaps to fill to the downside. There's probably one at 167, a very, very small one. But again, we'll have to see what comes up next in terms of Apple. Again, but that 200-day holding is a good sign. Bullish or bears for the rest of the month? I'm going to stick with bullish. I am going to stick with that, yes. Tough one because especially if you're a bull, it's been an ugly-ass week in terms of volatility. Wednesday was great. After that, it was pretty ugly. So I still believe the Saturn rally could be coming. Absolutely. I definitely want to see how Sunday opens in futures and how Monday opens in futures. That's very, very key. So really don't have any idea what to expect in futures. We were green last Sunday. The Sunday that passed, and then we were red this whole week. So I think that most of the selling is probably exhausted now, and I think we get a continuation to a regular scheduled programming. Hey, you're welcome, Chris. Thank you. All right. I guess not many people on. Listen, it's Friday night. I get it. You guys are going to do happy hour. You're going to have a drink. Totally understand. After this week, I may just join you guys. Have a great rest of your weekend. Enjoy some really great football. Unfortunately, no Manchester United this weekend. EPL canceled their game against Brentford. Cowboys play at 1 against the Giants. So let's see what's up. Maybe we'll have some fun watching some football. But we'll leave it there. And if you ever want to talk sports, I'm a big sports guy. I usually live tweet on my personal Twitter on Sundays when the Cowboys games. Usually venting on Twitter, if anything, watching my Cowboys play. It's at CEO G.A.R Capital. Feel free to add me, and we can always talk on Twitter. It's always fun. Have a great weekend, guys. Enjoy the sports weekend. Enjoy your weekend before your family comes over or you have any holiday parties with family. This is your time to enjoy. Listen, most important thing, and listen, I'm the #1 critic of myself. This week was unacceptable. I'm not happy with how we performed. We did a couple of good trades, but still was ugly. So the most important thing is get back to the grind, get back to charting, get back to homework, and do what we can to move forward and get better from this. That's really it. So if you had a tough week, guys, I hear you. Make it a double shot of tequila or a double shot of whiskey, and you'll come back better and stronger. So always have that in the back of your head that, hey, listen, mistakes happen. This is tough, not an easy thing to do. Being an investor is not easy, but you should be proud of yourself. At least you're taking the steps to be great and have the great endeavor for it. Let's see. TGT retail, baby. Okay, let's take a look at that before I sign off. Walmart, down, obviously down at 140.02, kind of broke down below that, 139. Consumer defensives like Walmart didn't do well today, but you can see this range. Very, very tough to trade. Target isn't bad. My wife shops there enough, so you would think the stock is at an all-time high, right? And look at this, right at support 222. So if you're looking to possibly buy some Target here, wouldn't be a bad level. Target's a great company, great financials, they do very well. So I think Target's a good company to own if you wanted it. In terms of calls, if it comes back around 232, 233 with some good volume, we'll see. TDD, Microsoft today, the trade desk, very cool. Love Microsoft. Looking at the trade desk, a lot of those companies that were high growth did very well today. Very high beta. AMC, Zoom, Penn, Roku, GME, Peloton, DraftKings, CGC, Moderna, Pinterest, BlackBerry, Palantir, SoFi, Football, Snap, Alibaba, Space, Airbnb, Square, all did well today. So again, a lot of those companies that were shorted during this bloody ass couple of weeks, they bid it today in a short squeeze. And that's all you need to see is AMC right here. AMC with a great weekend after Spider-Man. Maybe they have a blockbuster weekend with Spider-Man. Again, I didn't think it was that great. I did see it last night at an AMC theater. One for the home team. And you could see 30.69. If that breaks, it gets interesting to around 32. Your big resistance on AMC is 33.21. We'll go and leave it there. Yeah, I know. Good charts up, man. And it's just an ugly week where you just get mowed down. That's really it. I know how the Spider-Man movies, no spoilers. I'm not the biggest Spider-Man fan, but I really liked the Miles Morales movie, the Spider-Verse. I thought that was great. This one was, I was kind of bored, to be honest with you. I loved Endgame. I love the Avengers. My favorite, I guess, Marvel movie, to me, it is definitely Infinity War. I love the Thor. I love the first Iron Man, which was great. Black Panther is one of my favorite ones. So again, I'm not some Marvel hater. I like it. This Spider-Man was kind of boring. To be fair, I didn't watch the other two. So I knew what was going on. I read the Wikipedia before I saw the movie, but the other two I didn't watch. So this one, I mean, it was okay. I mean, I think you'll be entertained, but I don't think it was that great. I don't put it in the top echelon of Marvel movies, personally. A lot of people in the audience cheered. They were probably way more invested than I was. Knowing me, I was just like probably not into it for the most part. But I think it was all right. What does short squeeze mean? Short squeeze means, Katie, is that when someone is short the market, they're taking a negative position. So again, they're selling. Let's say their stop loss hits and they need to close. That means they have to buy. If you get enough sellers buying, the asset goes up because they're being bought. That's how it works. All right. Thank you so much. The boy, J. King, Katie, Chris, Paxamount, GS. I appreciate you guys for joining me this Friday. Go enjoy some drinks. Enjoy your weekend. Stay safe. And we'll catch you guys bright and early Monday morning, 9 a.m. Eastern Standard Time to talk about the markets. Let's see what happens. Have a good one, guys. And don't forget, weekends are for crypto. We'll be watching that on Twitter. Make sure to follow us at G.A.R Capital. Have a good one, guys. We'll catch you Monday.